Keith, it's been a volatile year for capital markets. What's been driving this volatility?
Yeah, Steve, it's been a volatile year, and it's really been driven by two main factors. The uncertainty with the U.S. trade policy that we continue to deal with, and also the geopolitical events, the conflicts in the Middle East and Eastern Europe has created uncertainty in the U.S. economy and the global economy.
So tariff policies are continuing to impact investor sentiment.
They are continuing to have an impact, although I would say that the worst of it was in April, early in 2Q, where there was a large pause in transaction activity and tenants making decisions on leasing. But as we've worked through the trade policy and come up with some agreements, like the agreement with the European Union and some of the pauses and high tariffs with China, I think that uncertainty has really subsided. So it's still there, but it's definitely less of a factor now than it was a few months ago.
Some of the current trends that are driving capital.
Really, I think that the weak job report that just came out, combined with some of the other weakness in the economy, is driving a lot of economists and investors to believe that the Fed will probably consider lowering interest rates before the end of the year. And I think if they do that, it'll really provide a boost to the economy and also to consumer confidence, which will be a positive going forward.
Sure. So the big question is 2026. You sound like you're ending the year on a positive note.
Yeah, I think 2026 is looking positive. I think the big factor is that we're starting to see that there's more certainty that's coming into the markets. So the commercial real estate sectors have really been repriced since the interest rates increased in 2022 and 2023, and construction costs remain elevated. So buyers can really buy properties now at a significant discount to replacement costs, which is definitely a positive. And also the construction pipeline, typically for multifamily and industrial, is declining significantly. So that's going to give investors an opportunity to achieve rent growth as demand catches up with supply in those sectors. So I really see that there's going to be increased certainty and increased investor interest and transaction activity going into 2026.
Well, that's a great positive note to end on. Thanks for coming in today to share those insights, Keith.
Thanks, Steve. Good to be with you.